In the digital realm, where the echoes of blockchain resonate, Bitcoin emerges as the crowned jewel, its scarcity akin to digital gold. A finite supply of 21 million coins was etched into the code by its enigmatic creator, Satoshi Nakamoto, back in 2008, with the intention of sculpting a currency immune to inflation. A digital fortress against the tidal waves of market volatility. As we stand today, over 90% of these digital treasures have been unearthed. The mining landscape buzzes with the energy of miners, their equipment humming in the relentless quest for Bitcoin. This chase, however, is not infinite. The question looms large. What unfolds once the 21 millionth Bitcoin sees the light of day? The halving mechanism, a stroke of genius by Nakamoto, ensures that the bounty for miners halves every 210,000 blocks, approximately every 4 years, tempering the pace at which new Bitcoins are introduced to the world. From the original reward of 50 Bitcoins per block, we've witnessed the rewards dwindle to a mere 6.25. Bitcoins today, a trend set to continue until the mining well runs dry around the year 2140. But what happens in a world where the mining reward vanishes into the ether? Let's delve into the future, a realm where every Bitcoin has been mined, and explore the cascading effects on miners, investors, and the cryptocurrency ecosystem at large. Once the curtain falls on Bitcoin mining, the landscape will undergo a seismic shift. The initial reaction might lean towards panic. After all, if the incentive to mine disappears, what keeps the miners digging through the digital crust? Here lies the silver lining: transaction fees. Currently a sliver of miners' income. These fees are predicted to burgeon, filling the void left by minting rewards and ensuring the wheels of the Bitcoin network keep turning. In the evolving landscape of Bitcoin's post-mining era, a significant transformation awaits the community of miners. No longer incentivized by the allure of newly minted coins, their focus will pivot towards the intricate task of processing transactions, with fees as their new reward. This shift raises intriguing possibilities. While some voice concerns that only transactions of substantial value will merit the miner's resources, ongoing technological advancements promise a silver lining. Innovations aimed at reducing operational costs have the potential to widen the array of transactions deemed profitable, ensuring a more inclusive ecosystem. Concurrently, a trend toward facilitating large, high-stakes transactions could emerge, positioning the Bitcoin network as a more exclusive, yet profoundly secure digital fortress. This evolution suggests a future where the Bitcoin network adapts, becoming more efficient and selective, ultimately reinforcing its foundation and enhancing its appeal to a broader spectrum of users and investors. For investors, the cessation of Bitcoin mining could signal a bullish future. The logic is straightforward. Scarcity breeds value. As the supply of new Bitcoins dwindles, demand, driven by long-term investment and institutional interest from titans like Tesla and Square, could skyrocket, propelling Bitcoin's value to new zeniths. The narrative of Bitcoin as a store of value gains substantial traction here, painting it as a digital vault for wealth preservation. Yet, amidst these predictions, a wild card remains: the Bitcoin protocol itself. Theoretically, a consensus among the Bitcoin community could usher in a change to the 21 million cap, altering the supply landscape entirely. This scenario, though contentious, underscores the dynamic nature of Bitcoin as a decentralized entity, subject to the will of its global community. At the very core of this discussion lies the blockchain, the robust backbone of Bitcoin, serving as its digital heartbeat. Miners, the custodians of this ecosystem, play an indispensable role, not just in mining new coins, but in validating transactions and fortifying the network against threats, thus preserving its integrity and trustworthiness. As we navigate towards the era where the reward for mining new coins diminishes to zero, a pivotal transition is set to unfold: the adoption of a fee-based incentive model. This critical evolution ensures the continuity and resilience of the blockchain. By shifting to transaction fees as the primary reward for miners, we safeguard the perpetual motion of this digital ledger. Such a transition is not merely about maintaining operational continuity, it's about ensuring the blockchain remains immutable, secure, and decentralized. In essence, it's about keeping the blockchain's heart beating strong, ensuring that Bitcoin remains a trustless, distributed system that operates efficiently, irrespective of the mining landscape's changes. This model not only promises to sustain the blockchain's vitality, but also reinforces the value proposition of Bitcoin as a secure, decentralized currency in the digital age. Envisioning the future of Bitcoin post-mining is akin to navigating uncharted waters. Yet certain predictions can be made with a degree of confidence. The transition towards a fee-based mining model appears inevitable, ensuring the sustainability of the network. For investors, the allure of Bitcoin is likely to intensify, as its fixed supply contrasts sharply with the inflationary tendencies of traditional fiat currencies. Moreover, the potential for protocol changes, driven by community consensus, adds a layer of unpredictability to Bitcoin's saga. It highlights the power of collective decision-making in the cryptocurrency domain, a testament to Bitcoin's foundational ethos of decentralization. As we peer into the horizon, the end of Bitcoin mining not only marks the culmination of an era, but also the dawn of a new epoch. This transition heralds a shift towards a more mature, perhaps more exclusive Bitcoin ecosystem, where transaction fees become the new gold for miners and scarcity drives unprecedented demand among investors. The journey of Bitcoin, from its inception to the mining of its final coin, is a testament to human innovation and collective belief in an alternative financial system. As this chapter closes, a new one opens, ripe with possibilities, challenges, and the enduring allure of the world's premier cryptocurrency. In this evolving narrative, the Bitcoin community stands at the crossroads of tradition and innovation, holding the keys to the future of this digital odyssey. The path they choose will not only determine the fate of Bitcoin, but also set precedents for the wider cryptocurrency landscape. As we venture into this unknown, one thing remains clear: the story of Bitcoin is far from over.